Welcome to the Crypto Life. We're your hosts, Mike and Prince. It's September 5th, recording right around 9 p.m. Mike, why are we doing this pod?
You asked me to do this.
Well, I thought it would be fun to do. Neither of us, I think, have done a podcast before. We're always talking about crypto in our free time, like whenever we're meeting up. Figure like crypto is kind of hard. It's hard to understand. It kind of like mixes technology and finance, like things that most people get confused about most often. And so I think the goal for this podcast is just to kind of like have fun and kind of make it interactive with like people who want to listen and ask questions. Just kind of like share what's going on with a couple guys who've been in the space for a while.
Yeah, and to add on to that, I feel like the space is just moving so fast and it's impossible to kind of keep up with all the information that's out there, especially for people who are kind of following the industry more passively. So hopefully we could add value there by kind of listening to all these podcasts, reading all these articles and resources, and hopefully synthesizing in a helpful way.
Yeah, and I think since this is the first episode, I'm sure it'll be rough, but if people have feedback or even questions just after this, like we're going to have an email. It's called thecryptolifepod@gmail.com. You guys can send us all your feedback, and hopefully we can just get better with this over time. So, Mike, I wanted to ask you in this podcast, like, how did you get into crypto?
So I personally thought crypto was a scam for the longest time. So I used to work at a hedge fund, so I was in finance, not really the tech side of things. I didn't think it really made sense. Part of it was probably cope because I missed out on the entire 2017 run up, and then it crashed, and then in the early spring of 2018, like February, Bitcoin was down to like $3,500 or $4,000. And I saw a bunch of really smart people on Twitter still like tweeting about it and devoting their whole careers to it, putting their life savings in it, like just typical crypto stuff. I was like, wow, like maybe there's something here. So I kind of Googled like the best book on Bitcoin, and I read the Bitcoin Standard. As soon as I read that book, it kind of clicked, just kind of how central banks are printing money at an unprecedented level right now and kind of debasing the entire money supply, and Bitcoin as like a solution for that. And I thought it was like super interesting, the whole like immaculate conception thing with Satoshi and kind of creating the project from nothing and like fading away into darkness. It's kind of like something out of a movie. It's kind of wild.
Yeah.
But the principles of like sound money really resonated with me. I went pretty much all in on Bitcoin at that time in like March of 2018. And I hodled for a couple of years. And then I recently made the switch over to Ethereum and converted all of my Bitcoin into Ethereum when I saw a few developments like EIP 1559, the merge to proof of stake. And I saw Ethereum really improving their monetary properties. That kind of convinced me to make the switch over, plus all the organic demand. And I wrote an essay on that you could put in the show notes. I don't know if you have show notes, Prince, but yeah, that's my story. What about you?
For me, I've been in the space for a while, actually. So I graduated in 2013. I thought, naively enough, like the stock market was overvalued at the time, thinking like we're just around the corner from another big stock market crash. Coming out of college, I was also pretty libertarian. And so I was hanging around like the libertarian subreddits. And I had disposable income for the first time. And I was thinking like, okay, where do I invest? Like, where do other, libertarians invest? And so I remember like making a post, and someone just kind of made a really long response about Bitcoin. And so next thing I know, I'm on like Bitcoin
replying
subreddit.
To your post in like Reddit.
Yeah. Yeah. And so they replied to me. I like looked into the Bitcoin subreddit, and I was just like, wow, this is like really interesting. And just started like going down the Bitcoin rabbit hole. I started buying Bitcoin like on Coinbase, like in July of 2013. Was basically just buying like whatever I could through the end of the year, up and like into like the big bubble that happened when Bitcoin touched $1,000. And so then like, I was like, okay, Bitcoin fell over the next few years. I kind of lost interest in it, wasn't really following the space or anything. I was kind of working in traditional finance roles. In early 2017, I remember my parents called and they said, Bitcoin's like back over 1,000, like, we could finally get some of our money back. Like, and who knows, like, Bitcoin could go back to $200. We never know. And so I thought like, okay, I'm making a good decision by, getting out because, who knows, like Bitcoin could go back down. So I started selling my Bitcoin. And at the same time, I was thinking like, where do I put this all in? And started researching Ethereum. I didn't have like a huge investment thesis or anything. I didn't read a whole book on it, but I was captivated by the concept of proof of stake, just making passive income on Ethereum by staking. And so I decided to just throw all of my Bitcoin and cash into Ethereum and have just been hodling Ether since early 2017. And obviously Ethereum has grown into becoming a much better and bigger asset than I could have ever imagined, going into it in 2017. But now, like you look at it and you've got DeFi, you've got NFTs, you've got DAOs, there's so much you can't even keep up with. And then plus like the monetary system of Ethereum just keeps getting better and better.
What was the worst ICO you were in 2017?
The worst ICO I was in was this one called Ethereum. I didn't actually participate in the ICO, but I got in like right after the ICO ended. And I was like, oh, this is the only ICO that's actually going to pay dividends quarterly. And so I think I threw like a little over 100 Ether at it. And back then was like, because Ether was like trading at less than $100, wasn't like too terrible, And now actually like the developer announced last week that he's actually shutting down the project and returning all the ICO funds, so it's kind of like ended up doing okay.
That's huge.
I think it was still like over a 50% loss in ETH terms, but whatever. You win some, you lose some.
Right. I mean, you wrote that off basically, right? Yeah. You thought that was going to zero.
Yeah. I'm still surprised. Like I held on to those tokens. Like,
could you even do anything with them? Could you like sell them? I guess you could. Yeah.
I could have sold them, but I basically like every quarter I would just go log into the smart contract with MetaMask and collect my, half an ETH to an ETH dividend. and I was like, some quarters were better than others, but, with like gas where it is, like just really made like the contract unusable. So people basically stopped using it, volumes declined, and like there wasn't really any profit. So, and it's just kind of shut down. Did you ever do any ICOs or 2018 investing?
No, I did not. I was all Bitcoin until I started buying a little Ether in September of last year. And then I've only recently, I made the switch to Ether in like March. And I've only recently started like dabbling in like some DeFi stuff, mostly not even in like other coins. It's kind of just using like, I have like portion and curve, which it's kind of amazing, right? Like that you could like earn 9%.
Yeah. You're talking about the ST ETH pool on curve.
Yeah, exactly. Yeah. I don't venture too much. I kind of like set aside some funds for like kind of just aping into stuff. But I've kind of stopped doing that just because I feel like it's too good of a risk reward right now to pass up on.
I think what I've learned just like being in the space for a while is that it's really hard to outperform ETH. It's just got all these great monetary aspects. And I think the whole DeFi space is really learning that too. Like if you look at all of DeFi and how it's traded against ETH over like the last year, I think everything's down like 50% plus in ETH terms. It's unless something is like very uncorrelated to ETH, it's just ETH has got this amazing runway that's just going to continue for a long time.
Yeah, and it's kind of wild because all of those coins are up a lot, so people think they like crushed it. But when you start pricing stuff in ETH, everything looks a lot cheaper.
Yeah. So and like one thing I wanted to talk about in this podcast was also prices and market cycle. I think there's a lot of hype that's come into crypto. I mean, obviously the prices we're seeing are phenomenal. We're touching $4,000 per Ether. Bitcoin's over 50,000. Where do you think we end the year, and where are your expectations for Ether?
Yeah, I mean, I don't have any price predictions at all. I kind of just think it is going a lot higher, right? Just because. Okay, so there's a couple things. Yesterday, ETH was actually deflationary, which means that through EIP 1559, it actually burned more ETH than was issued. So, which is kind of wild because you have a bunch of people kind of claiming that Bitcoin is the most scarce asset. And Bitcoin's inflation, I think, is like 1.5% to 2%. There was actually a tweet from the director of global macro at Fidelity. which is it kind of shows you just how early we are and how little people understand what's going on. So during Timmer,
you want to talk about that? I think you had a take on it on Twitter.
Yeah, so he tweeted basically that ETH is being penalized because it's not as scarce as Bitcoin, basically. And he said that Ethereum's inflation rate is 4.2% versus Bitcoin's at 2.0%. So while that's ETH's current 4.2% is ETH's current inflation rate right now, what it's not factoring in is EIP 1559 issuance or burn.
Mm-hmm.
Sorry. So basically, you take ETH has 4% inflation at the current moment.
Yep.
That is going at proof of stake. That is going to drop to less than 1%, just because proof of stake is more efficient than proof of work, and it requires less issuance to secure the network. And then you're going to have EIP 1559 on top of that. That's going to take ETH issuance negative, actually. Versus while Bitcoin's still inflationary and won't be disinflationary. So disinflationary is when like there's 0% inflation until what was it 2140, right? So ETH supply cap is supposed to peak at 119 million next year, and Bitcoin won't hit its 21 million supply cap until 2140. So it's kind of like, so sorry, I know I threw a ton of numbers at you, but basically Ethereum's going to be a deflationary asset next year. At the same time, demand is growing exponentially, right? You have all this demand for yield for DeFi, right? So you have like not so much retail, but like institutions. So if you look at kind of, I know Consensus offers staking for institutions, which is they could generate a 6% yield through that. I know several startups going through that. Is it Compound? Compound has the treasury offering, right? Which is offering 4%, right? So that's a ton of capital flowing into Ethereum through DeFi. And then you have NFTs, which I think is going to be like 100 times bigger than DeFi. And there's just so much capital because if you want to buy an NFT, if you want to buy a Punk, you have to buy an Ethereum, right? So you have demand growing exponentially at the same time that supply is going deflationary. And it's just going to lead to an exponential rise in price. This is kind of my take. And I feel like you can't afford to miss it.
Yeah, I think you have like other people I know, like you've actually like a lot of people I think come into the space and they don't really know what they're buying. They just know that crypto prices are going up. You know, why is it that like Ether, I think you do a good job of explaining this. Like why can't Ether's inflation just already be at 0%? Why does it have to be 4% versus Bitcoin's 2.5%? If Ether's monetary policy is so, fluid and can be changed, why not make it 0% tomorrow?
So you honestly probably know this better than I do, but right, basically Ethereum has kind of a minimum necessary issuance policy, right, to secure the network. And they'll issue as much kind of supply of ETH to secure the network as possible, as required.
Right.
So the basic idea is that with switch from proof of work to proof of stake, it requires less of that issuance just because you'll have I actually don't know how, can you actually explain this? Just because, right, like basically they want to have a certain number of validators validating the network. And that kind of works out to like 1% or 0.8 issuance% inflation, right?
Yeah. So with proof of work, which is the consensus mechanism that both Bitcoin and Ethereum are on, basically like how do you figure out what the next block is in the blockchain? Bitcoin has this monetary policy that every 4 years, the rate at which the block reward gets issued gets halved. With Ethereum, the reason why you have block rewards in the first place is for security. Miners provide security to your chain, and so you have to pay them. And you pay them with essentially inflation. So, you issue your currency and miners will, secure your blockchain in exchange for, new currency being issued. Proof of stake is like a brand new consensus algorithm that's taken like several years to develop, where basically instead of using like all of this high tech or energy intensive computer hardware to like mine and secure blockchains, you can basically run it off of your own laptop and consume very little electricity. The way it works is you basically, you can think of it almost like virtual mining. Like you lock up your crypto, which you don't have to do in proof of work. You lock up your crypto in proof of stake. You kind of virtual mine the next block. But if you do anything wrong, you have the potential of like having your whatever you staked taken away from you. the cost of security goes down a lot because you don't have to pay validators nearly as much as you pay miners because there's this, incentive to not, act maliciously on the chain. In short, you basically you can pay people less through proof of stake in terms of issuance. And so right now, Ethereum, I think its issuance is around 4 or 5% that it pays miners. But to stakers who are essentially doing the same thing, you can pay them, depending on how many stakers there are, anywhere from 0.5% to 1%. If there's less stakers, you pay a little bit more to incentivize staking. If there's a lot more stakers, you pay them a little bit less, and everything kind of falls on a curve. So if there's 30% of all Ether is locked up in staking, you can basically that's you can pay people almost nothing because there's so much security. If in order to really hack the system, at that point you'd have to buy more than 30% of Ether, stake it, and then attack the network. Whereas with proof of work, right now, if you just have 50% or more than 50% of the energy and you put up your miners, you can attack the network, and you won't really have anything kind of taken away because there's no slashing or kind of negative ramifications for attacking the chain. I mean, yeah, you could go pretty deep into this. I mean, it gets very technical, and this is probably where a lot of people get lost in crypto. People see blockchains and issuance and all this stuff, and it's complicated. I'll be honest, I don't really understand proof of work and proof of stake from a very design or architectural level, but enough to think okay, I kind of understand how it affects the economics and understand it enough to see that, okay, proof of stake seems like a more evolved form of building on a blockchain than proof of work. That would be my take.
No, that makes sense. And you're right. It's hard to explain kind of in simple terms, why is proof of stake so much more efficient than proof of work? If I had to kind of boil it down, right? If you think about it, if you're proof of work, if you're a miner on a proof of work chain, you basically buy hardware that is no good after 2 years, right? So all the dollars that you invest in that hardware, the reward you have to earn from mining has to replace that hardware cost plus some type of operating profit to provide you a return on your capital, right? Whereas with Ethereum and proof of stake, all you have to do is stake your ETH, and it's still there after 2 years, right? It's still there in perpetuity. And all that you're giving up is the opportunity cost of that capital. So it just has to reward that capital. So for example, if let's just say 10% of all ETH is being staked and there's 1% issuance, that would return a 10% on investment to those stakers, right? Which is a lot, right? For just the opportunity cost of capital. And then with things like staked ETH and Lido, right? You get into the point where you can earn those rewards without even having to forego moving them. But we don't have to get into that now.
Yeah, it's funny how just deep the crypto rabbit hole goes. I think there are people out there kind of just on one spectrum, obviously don't get involved in crypto at all and have crypto exposure. And then there's the other side of it where it's probably developers and people who really understand the architecture and the Ethereum virtual machine and kind of I think there is a healthy middle ground, which is probably where most people fall, especially who are just in the crypto space. They're not hardcore devs who build on blockchains, but they're also not people who kind of say everything in crypto is a scam, or just kind of just they're only solely buying crypto for the price speculation. There's a lot of cool stuff to do in crypto now, and that didn't used to be the case. Even just a few years ago, think about it. The only thing you could really do with Ether is just buy into ICOs.
Yeah, it's product market fit for the first year, for 2017.
Yeah, and Ethereum's been around since July 2015. That's when it launched. I mean, think about 2016 didn't have anything except for the DAO, which was kind of a failure, and then 2017 just ICOs, which weren't so great. But now it's you can actually do so much with crypto that it's you can get lost in all of these worlds, whether it's DeFi, these communities with social tokens. And I think people are really pushing the boundaries, especially when you're talking about people are now talking about the metaverse. I don't even think people know what the metaverse is, and they're just like they're going on like creating it. Yeah, so it's exciting. This whole space is exciting, and want to get more people into the space in like a hopefully like a friendly way. You don't need to like be a developer to get into it.
So you actually raised like a good point. Like if you're like absolutely new to this space and you come in, there's just so much to wrap your head around, and like you think you missed it. You're not sure kind of what the benefits of other chains are, and it's easy to see that way, like how something like Cardano like has a $90 billion market cap, which is kind of ridiculous, right? Like I actually had one of my parents' friends. They shot me a Facebook I don't even use Facebook anymore, but like I got an alert somehow for Facebook message. He's like, hey, like I hear this crypto thing's like pretty interesting. Like, do you have any coins you'd recommend? He's like, I'm thinking like Ethereum Classic. And it's kind of like there's so much information in a space, and there's so many people like shilling like scam projects. It can be tough to like kind of dissect and wrap your head around. So hopefully this podcast helps with that.
I don't know what it is, but like people seem to love Cardano. They seem to love like kind of these projects that haven't really gone anywhere. Like Ethereum Classic, for example, has literally done nothing. For some reason, they just capture so much attention from like the retail crowd.
Ethereum Classic has a $9 billion market cap. I have CoinGecko up, which is kind of crazy. Like that's just insane.
Yeah.
But then there are like real projects like Solana, right? Like I've been diving into Solana a little bit more and just trying to, and I do think it's like super legitimate. A bunch of really smart people who I respect on Twitter have kind of raised good points about not falling in love with like an asset, right? And like, although I kind of just absolutely love the ideals of the Ethereum community, so that it's kind of hard. I do think Solana has some merits, and it's not kind of just like a fork of like a test net, you know?
Yeah, I think we should get into like some of these other chains maybe later on, but obviously like there's still just so much to cover about like Ethereum and the ecosystem there, like what's going on. I think you like posted links and news stories like what's going on. Like I thought this was a really fun one. Like Reese Witherspoon tweeted that she bought her first ETH this week. And Logan Paul responded to her saying, hey, Reese, like, what's your ETH address? Like, let me send you an NFT.
Yeah, it's kind of wild. And like these people like have like millions of followers, and it's kind of just starting to, I don't know, like some people think, hey, is this a top? Reese Witherspoon's tweeting about NFTs and ETH? Or is it just starting to enter like mainstream? I think Reese Witherspoon's like billionaire. I think she just sold her studio, right?
Oh, I have no idea. I did see some tweet that she's like bought into like some pretty successful projects like pretty early on. Yeah, like the way I think about Ethereum is like it's always been like kind of at the forefront of creating all these like next wave of innovations. All of these like new age chains, call it Solana or Polkadot or even Cardano, they all have to like play a little bit catch up, building up to this ecosystem that Ethereum's created. And by the time, like, I think they all catch up to it, everyone who first got even captivated by the idea on Ethereum, they're like, oh, if I want to do that, like Ethereum is the only place I'm going to do it. DeFi has kind of been monopolized on Ethereum for almost a year now, since kind of like DeFi summer last year. And if you think like DeFi brought all of these people into the Ethereum ecosystem over the last year, the ones who are probably building on it now for like, you know, the DeFi projects 2.0 or 3.0, they're probably all going to be launched on Ethereum too, you know? And like same thing with NFTs. NFTs have kind of captured a lot of people's attentions, maybe 10x the amount of people that got into DeFi. You know, people who, you know, weren't looking at crypto before, never really thought anything of it, or like, whoa, NFTs are cool. Let me explore it. The only place I can explore it is Ethereum. Okay, I want to build something on NFTs. The only place I can build on it is Ethereum. Now, like by the time they launch their projects, you know, 6 months from now or a year from now, you know, they've already started building on Ethereum. Unless you're building something completely new or innovative on these like new chains that just doesn't exist yet, you're always kind of just playing catch up and you're playing with copycat projects. I don't know. What do you think about that? Like the moat, Ethereum's moat is like not its speed or ability to like make, you know, transactions. It's really like just the community and ecosystem that are captivated by the new innovations that are constantly coming out of the Ethereum ecosystem. And that just compounds, until I think there's just something more innovative created on a new chain that captures people's attention and inspires people. People, I think, are just going to keep building on Ethereum.
I agree with that. I mean, Ethereum's where most of like dev mindshare is, which honestly I think is the most important asset in crypto. Then you have like all the network effects, like liquidity network effects, and then NFT network effects, which honestly is what I think cements Ethereum as the number one chain right now, is kind of all these NFTs. And if you're if you're a legitimate project, you're gonna mint your NFT on Ethereum. It's that's where punks are, that's where autoglyphs are, that's where fidenzas are, right? That's just where you are if you're a legitimate artist. However, I will say that Ethereum does need to scale, just because gas prices are out of control. Like I look at somebody like my younger brother who maybe has like $2,000 in savings, right? Like if he tried like minting NFTs and stuff, the gas fees he might be able to mint like two, and the gas fees would eat all of it. It's just impossible to do. So I actually kind of view chains, kind of these other L1s like Solana and Polkadot, Terra, as kind of net positives, just because they're kind of, I don't know, onboarding the next billion users, and teaching them, right, like all the cool things you could do on a blockchain that they otherwise wouldn't be able to do on Ethereum. And then once we have L2s, like we had the Arbitrum launch last week, once Ethereum scales and gas fees are a little more affordable, I think a lot of those users will migrate over to Ethereum, especially once L2s start issuing tokens, which is a whole nother dynamic too.
Yeah. I wonder, like, now that NFT is big, like how much more important is artist mindshare going to be compared to like dev mindshare?
That's an interesting point.
I guess we'll see. One thing I think we both agree on is the flippening is going to happen, though.
Yeah, I hate to say this because like Bitcoin, like I love Bitcoin. I love like the sound money ideas, and Bitcoin's how I got into this space. But I don't see bull case for Bitcoin anymore, right? It just doesn't make sense to me, because like Ethereum, everything, right? Like security and scarcity, where Bitcoin's too, I don't know, they're
like the pillars.
They're the pillars that Bitcoin is based on. Exactly. And Ethereum is better than Bitcoin in that respect, right? Ethereum's going to be more scarce after proof of stake, right? It's going to be deflationary, and Bitcoin can't compete with that. And then it's going to be more secure, just because, as you mentioned before, the block subsidy for Bitcoin is getting cut in half every 4 years, all the way down to zero. And then Bitcoin is going to rely solely on kind of transaction fees to secure the network, because there's no applications on top of Bitcoin creating demand for that block space. That security reward is going to be abysmal compared to what the market cap could be if the kind of Bitcoin bull case plays out and Bitcoin's like $100 trillion asset, right? It would be like, I ran the calculations, I'd have to find the numbers, but it just doesn't make sense. Whereas Ethereum, right, with proof of stake, it's extremely secure. And I quantified this all in that essay, but yeah. What are your thoughts?
I wanted to ask you, like, when do you think Ethereum actually flippens Bitcoin? Do you think it takes a couple decades, or what do you think?
I don't know. Like, obviously, like taking a longer time horizon is better if you want to be right, but I would say like it happens in the next 24 months. Like that's a pretty conservative take. Like I feel like it might be the next 12 months, but like I feel like I would bet a lot of money that it's going to be in the next 24 months. What do you think?
I think that would be crazy. I think that would be a big moment for the entire industry. Bitcoin's always been number one. People have always viewed it as, the granddaddy crypto. It's what a lot of institutions first buy when they're getting into the space. I mean, you look at Michael Saylor, like he just like went all in on Bitcoin. And I think once you see like a different crypto that's just number one, I think it just changes people's thinking a lot. Okay. And then people start looking into Ethereum. Why is it number one? And I don't know if people start selling off Bitcoin into Ethereum, or most of the new capital that's coming in goes into Ethereum. But I think it's really gonna shake up the industry in a big way. And part of why I think like the flippening is just definitely gonna happen is because Ethereum is general purpose, right? It's a platform where all of these other applications can be built, and like, there is this little meme, I guess now it's going to become a documentary, which I really like this name. It's like Ethereum is an infinite garden, where like an endless possibility of like different applications and tokens and sandboxing of new ideas. And that, I think, just can't compete with, we have a 21 million hard cap supply, and that's all we are.
It's kind of like a meme. It's like a meme. And honestly, that's one of the things I love about Dogecoin is it kind of like just laughs at it a bit. It kind of exposes Bitcoin for what it is. It's kind of just a meme. Not to like take anything away. Obviously, like there's tons of really smart devs like doing all types of interesting kind of improvements to the underlying protocol. But
yeah, I mean, like I know Jack from Twitter is doing a lot on Bitcoin. I wonder like where that goes, because a lot of people have tried it. People have tried Bitcoin for payments. People don't really want to pay in Bitcoin. People like, I mean, a 10-minute confirmation time to like actually know if someone else received your Bitcoin or not is like a lifetime, considering like if I send you an email, you get it instantly. So I think this is actually happening right now. I just recently heard this, that El Salvador, which made Bitcoin legal tender, is now seeing all these protests in El Salvador from people who don't want to use Bitcoin. They don't want to be forced top down to have to accept Bitcoin at their, small shop or whatever it is, because I don't know if it's inefficient or what, but it's just interesting to see, because like, I think Bitcoin's always going to try, like there's going to be some people in the Bitcoin community that are always going to try to make it into kind of something it's not. And Bitcoin's just not useful or good for payments. It's good for Swiss bank account in your pocket, but not so great for payments or building applications or exchanges on top of it, which I think is what Jack wants to do.
Yeah, and the whole El Salvador thing is kind of weird because it feels like it totally goes against like Bitcoin's ethos of like kind of like a bottoms up movement, right? It's kind of like a top down enforcement of you must accept Bitcoin as legal tender. And that kind of like, I don't know, I feel like that's kind of emblematic of the whole kind of like Bitcoin community. And not obviously there's right, you get into a lot of trouble making like broad generalizations like this, but and oftentimes like it's kind of like only a select few Bitcoiners who are kind of like the loudest on Twitter. It does feel like a bunch of like the people who really kind of care about a lot of Bitcoin's ideals from early on have switched over to Ethereum.
Yeah, I mean, you look at like the Bitcoin OGs. I'm talking like OGs, Gavin Andreessen, Eric Voorhees, Andreas Antonopoulos. These guys, like in 2013, were kind of like, when no one else was talking about Bitcoin, they were kind of like beating the drum, like Bitcoin is amazing. And to have them say like, yes, Ethereum is legitimate and Ethereum has all these amazing use cases. I mean, for someone coming from that space, it was like a huge signal that like a lot of smart people and people I respect like also think of Ethereum as just as legitimate. Now, I mean, I don't even know who's left in the Bitcoin community, really. All of the names I hear are people I never even heard of, especially like back in like 2013, 2014. It's just, it's interesting. But there's always going to be a place for Bitcoin, I think. It is like still a very decentralized cryptocurrency. And I think it's definitely better than some of the ones that are highly, highly centralized.
I also kind of wonder like what guys like Michael Saylor are going to do. There's a few people kind of like left who are the flag bearers for the Bitcoin community, right? Like the heroes of the Bitcoin community who can't, so much of their identity and like their following is tied up in Bitcoin that like like Michael Saylor has, I think like $5 billion of his public company MicroStrategy's balance sheet in Bitcoin. Yeah. And if he were to say, let's just say hypothetically, I don't know, he's studying it, right? Like he studies it over Labor Day weekend and he realized, hey, Ethereum is going to win store value. What does he do? If you're in his shoes, what do? You can't really do anything. Like you're kind of, if you announce you're going to sell, are you going to be able to sell, right? Is the market going to be able to absorb 5 billion? Probably, right? 5 billion is just like 1% of Bitcoin's market cap. I think probably could, but I feel like that would scare a lot of people, right? Like I feel like a lot of people run for the exits.
I think he probably does eventually figure out Ethereum. He's a smart guy. I think it took him a long time to figure out Bitcoin too. I think it took him years. Like I've seen old tweets from him where he says Bitcoin's like a scam or something like that back in like 2014 or whatever. But he eventually did figure out Bitcoin. He came into it in a big way last year. And eventually he's going to figure out Ethereum too. And I think he's going to flip like at least 20 to 30% of his Bitcoin into Ethereum. And
that's a bold call. I don't know.
This is me totally speculating, but like, he has like complete monopoly over his company, his board. He owns a lot of Bitcoin himself. I think once the merge happens and a lot of the execution risk around Ethereum is gone, and he sees like, not only can, I invest in something that's deflationary and is also sound money, but I can also make a return on it. It's a productive asset. He could make money from staking. It's hard to think like he's just going to keep propelling Bitcoin up. I don't know.
Yeah. I don't know. Have you seen the clip? There is no second best asset. We got to play that.
It's such a great clip.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best, okay? But take all your money, buy Bitcoin. Then take all your time, figure out how to borrow more money to buy more Bitcoin. Then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin.
I just think too much of his identity is tied up in it that he keeps buying more Bitcoin, and he's just going to keep buying more. And it's kind of funny because he always buys the top, which is kind of hysterical.
It was his identity to like not be in Bitcoin for so long, and now he is in Bitcoin. So I think his identity could change. But man, like if Michael Saylor is probably, I don't know. Do you think there's any guys who are bigger into Bitcoin than Michael Saylor at this point?
I don't know.
Yeah. So if he kind of,
there's still some really smart people though, like Balaji Srinivasan, who honestly might be like the smartest human being alive. He is, I'm like not trying to exaggerate, but it's like true. He's still really into Bitcoin, and he thinks like there's kind of like a chance where Bitcoin's this global settlement layer that like Ethereum hopes to be, right? Just because it has the longest proof of work history, and it kind of serves as the only proof of work chain. He had an interesting Twitter thread on it. I don't necessarily agree with that, but like I kind of just like respect his intellect. So
no, I still think like, I'm not saying Michael Saylor converts all his Bitcoin to Ethereum. Like I think for most people who are coming into the space, I usually say, yeah, buy some Bitcoin, buy some Ether.
Do you say that? No, you don't.
Yeah, I do.
You tell people to buy Bitcoin?
Yeah, I tell people like maybe like
you shouldn't be doing that.
I tell people like maybe like 10 to 20% or 30% of your crypto, put it in Bitcoin. It is, I still think it's like tried and true, and I still think there's plenty of gains to be had in Bitcoin.
I disagree there. Because I think Bitcoin is sacrificing long-term viability for short-term stability, right? So it kind of like, it really prioritizes its scarcity and kind of like the scheduled issuance dropping, getting cut in half every 4 years, to the detriment of it paying its spending less and less on security every 4 years, right? So it might be safe because, right, like, and people really value that, right? So people are paying a premium for that right now. But longer term, if it's not secure, right, like then what is it, right? What?
Yeah, but
something's not a very good store of value if it doesn't exist in like 50 to 100 years, right?
Yeah, I mean, you're totally right. But you're thinking like really long term, like 20, 30, 40 years from now. I'm thinking in the next 10 years, while Bitcoin still plays out, I still think like, the asset kind of appreciates to $500,000. I know you probably completely disagree, but most people who are buying into Bitcoin, and there are still a lot of people who don't have any crypto exposure, don't understand the space. They come into it and they're like new dollars coming into the space. They're probably going to buy some Bitcoin. Bitcoin's probably going to go up a little bit in price. And I just don't think like, and this is unfortunate, and hopefully we can quell some of the ignorance with this podcast. It's like people don't understand security. People don't understand really what is blockchain technology. Like I think most people will think, okay, I want to have some exposure to crypto. Bitcoin is going to be the least risky of everything that I buy in crypto. So I just think like if more people are supposed to come into the space, which they will, and they're not going to understand everything to the depths we do, they're probably just going to keep buying Bitcoin for at least some time. And that's why, like, I think it's better if people buy Bitcoin than like a Cardano or a Tron or an IOTA, something like that.
Bitcoin's definitely better than that. But I disagree that it'll be like for 10 years, it's going to be considered a safe investment. I feel like my personal view is that in like the next 12 to 24 months, whenever ETH flips Bitcoin, it's kind of like this weird psychological thing where people think that price is caused by kind of like the narrative, where it's kind of reflexive, right? Where you could kind of enter into like a cycle where, let's just say ETH flips Bitcoin, people are going to be wondering why, right? Like, so people like new entrants to the space, people who own Bitcoin, they're going to be wondering why, and kind of like media and news outlets and research outlets are going to be trying to come up with reasons to explain why. And then you're going to see a lot of like these narratives that we're talking about now enter kind of like the mainstream, right? Like ETH is more scarce, right? With proof of stake and EIP 1559 burn, Bitcoin's not as secure. ESG concerns, right? Like proof of work is terrible for the environment. So institutions aren't going to want to invest in there. And I think you're going to see these narratives
Bitcoin's not a productive asset. You can't make
it's not a productive asset. Exactly. Right. Like, and like productive assets are something that like institutions understand, right? Hedge funds and
exactly.
And I think that once that does happen and those narratives start getting really, because people are going to try and explain it, right? When it happens, people are going to look for reasons for why that happened. And it's going to be a virtuous cycle for Ethereum and a vicious cycle for Bitcoin at that point. And honestly, once Bitcoin's no longer the most liquid asset, what is it? It's kind of just like a 21 hard cap meme. And like, I know that sounds harsh. And like, I love like a lot of the fundamental principles behind Bitcoin, but I just think that's the case.
Yeah. I mean, like how high do you think Bitcoin still goes though? Do you think there's any runway left, or do you think that security narrative has already started kind of seeping into people's minds and the narrative? And so, fresh dollars that are coming into the space, do you think they're just going to be skipping Bitcoin entirely?
I don't know. I used to think that, but I think I might be a little bit biased, especially after kind of like seeing the director of Global Macro of Fidelity kind of like issue that tweet about like Bitcoin's more scarce than Ethereum, right? Like it kind of, and Fidelity is supposed to be like a crypto progressive kind of firm, right? And they're supposed to be ahead of pretty much everybody, right? So if they're kind of not even correct in their understanding of this, part of me thinks that like, hey, institutional money could still like a lot of it's still going to flow into Bitcoin, right? So how high it goes, I have no idea, right? That I bet Pietro that Ethereum will hit 100K before Bitcoin hits 150K. I honestly don't think Bitcoin will hit 150K. That's like, was that like a $4 trillion market cap?
Yeah, I think it's about 3 trillion.
Yeah. So
that's
I don't see it going higher than that. I just because I don't see it going there in the next 12 months. And then I think 12 months is more than enough time for kind of like these narratives to propagate and people get smart enough on it.
So do you think because Bitcoin is just held up by this like 21 million meme that it's not really viable in anyone's portfolio and it has no place in anyone's portfolio, long-term or short-term, just because of, maybe it is just a meme, but it has I understand your point about, it has all these like security concerns like later on down the road. But like if someone new is coming into the space, like, do you just tell them like bet on the most innovative crypto assets like Ethereum and Solana, and that's kind of your portfolio mix? Or because like I still think like, Bitcoin has a place in people's portfolios kind of, if there's a bear market next year, Bitcoin's probably going to do the best out of all of them. People still think of Bitcoin a little bit as like a crypto safe haven. I think from that angle, like, yes, everything is very, very correlated to one another. Bitcoin, rather than like speculating on something that's, down in like the top 500 of CoinGecko, having something that's just kind of like tried and true, and it's, still continues to go up. So we don't know how, I guess, when that narrative actually proliferates to where Bitcoin no longer goes up.
Yeah, I mean, Bitcoin's been around the longest by far, right? And it's kind of started the whole space. So there's a lot to be said for that, right? And it's kind of like the most battle tested, right? And currently it has the highest hash power, right? Or actually does it now? Does it still? Or Ethereum flip it? I don't know.
No, I don't know. We'll have to check that. I think Bitcoin still has the highest hash rate.
But yeah, there's right. It's kind of like, that's why it's viewed as safe, right? Because it's kind of like very Lindy, right? To like Nassim Taleb, right? And like in his book, kind of Anti-Fragile, wrote about like the Lindy effect, which is like the longer something's been around, the longer it could be expected to stay around.
Yeah. And the more anti-fragile something is, the longer it's been around.
Right.
Yeah.
Like a portfolio allocation, what I recommend people put in their portfolio is, and I think Bitcoiners will kind of admit this, right? Like, so Bitcoin is very clearly going after the store value use case, right?
Yes.
They look at gold's market cap and they say gold has a $10 trillion market cap. If Bitcoin becomes digital gold and right, like surpasses gold, then each Bitcoin will be worth like $1 million, right? Is kind of like the general Bitcoin thesis. And if you read like kind of like the Bitcoin standard, Septine, like Amos, his book, and then like kind of like all, right? Like if you read like Nick Carter's essays, and then Parker Lewis has some great essays, they all kind of write about what makes for good money. And like the kind of like key thing that they all mention is saleability, which is essentially like liquidity. Like, can you sell something for the least amount of loss, right? Makes the best money. Like something that you can kind of like convert into anything without like losing a lot of value, right? And they kind of like break saleability down into saleability across time, saleability across space, and saleability across scales. And like scales is like, right, like a house in like apples, right? Like trading one, right? Like acquiring enough apples to trade for a house is a crazy feat. Whereas like Bitcoin, you could just do one Bitcoin, or you could do like one millionth of a Bitcoin, right? And like it's very divisible across space, right? Like trading a house for another house, like in like a different country, is like really hard, but Bitcoin, you could send it across the continent. Right. And then the hardest one to get across is like saleability across time, which is how long can it like can you preserve it in the future, right? Like the purchasing power be preserved in the future. That's the most important one, because there's a lot of potential monetary assets that meet the first two but it's kind of, and the core aspect of saleability across time is scarcity, right? So if you ask, why did gold right? I think there's like 116 elements, right? Why was gold kind of like what society converged on as a store of value? And it's because gold had an inflation rate of like 1.5 to 2%. And like silver was the next closest at like 15%, in terms of supply growth or inflation rate, right? So Bitcoiners kind of recognize that, and Bitcoin kind of has basically a 0% inflation rate starting in 2140, right? But people just like look at it and say Bitcoin has a 0% inflation rate, and that's the best we can do. And it absolutely is the best we can do. And that's kind of a part of the reason why I thought that was going to win store value, because there's never been a truly scarce digital asset, right? Where you couldn't reproduce this, you couldn't produce more of it, right? Like stocks, people issue new stocks all the time, right? Real estate, you build new houses and new apartments and buildings, whatever, right? The supply of even gold, right? Gold has a 2% inflation rate, right? Like people can produce more of it, but Bitcoin, you can't produce any more of it. So that's why I thought it was highly likely that society would converge on Bitcoin as a store of value. But now Ethereum's deflationary, right? And so it's, the supply is actually decreasing at 1% a year, which improves on Bitcoin by an order of magnitude what it did best, right? So I think that kind of makes Bitcoin like obsolete, right? The one thing that it did best, it no longer does best anymore, right? And it kind of chose that thing at the expense of all other things too, right? So
yeah. Well, what do you think about, like, I mean, Bitcoin really doesn't change much. It's kind of a finished product, right? I mean, everything, and we're both like 100% of our portfolios are crypto, right? At this point, we're really, and since everything is like so heavily correlated, we're really talking about little changes here and there to, our overall exposure. But, the reason why I think Bitcoin could still be good to have in, maybe like a newcomer's portfolio is just because they like it's this finished product, and everything else still has like a lot of execution risk. People are still building new things, and people are trying new things, people are experimenting, and there is like a non-0% chance of a little bit of failure for some of these other chains. And I would put Ethereum in that category too. I mean, I think it has the smartest people working on it. That definitely lowers the risk by a lot. But there's always that, non-0% chance that something could go wrong with Ethereum that may not happen with Bitcoin, because it is this finished product, and people ultimately just they don't necessarily want their money to upgrade every 6 months to a year, even if it is so much better. People want like just the assurance of it's not going to change. It is what it is. And I'm comfortable with that. What do you think?
No, I totally agree there. And it's funny because I feel like we actually talked, the first time we ever talked about this, I kind of brought up this point where like the best thing that could happen for Bitcoin would be Solana to flip Ethereum, right? And then it kind of goes to that, what you were saying, right, is people don't want to be trying to predict what's going to be the best money every time, right? And like people would kind of converge on Bitcoin as like tried and true, like you were saying, and all these other L1s are kind of competing for settlement of non-store value assets, right? And they're not store values, they're kind of like global settlement layers, right? So I do see that making sense.
Yeah, but I'm just talking about like a newcomer who might not like understand crypto and is still trying to get caught up with everything that's like going on in the space. I think once people like understand a little bit more about how blockchains work and how security works, and if you totally understand that, like, yes, Ethereum has a better economic system and will have ultimately like a better, monetary system than Bitcoin, then by all means go all in Ethereum. But until I think people learn about it, like I think Bitcoin is just like an easy place to start for most new people. I mean, I'm like, there's a reason I'm like 100% Ether. Yeah, because I understand it. But for someone new, it's like it's very easy to explain. Like, there's only 21 million Bitcoin. It's not changing, and at the same time, you get exposure to the crypto market. You might not have the fastest horse in the race, but you're still going to make some gains, and it's probably better than being in dollars or overvalued stocks that you might be able to buy this time of day.
No, I agree. And like, I mean, the truth is, right, we're kind of like almost fanatical, but like the truth is you do have to look at all these things like probabilistically and just say like, what are the chances this happens, and whatever. Obviously, I think ETH is like the highest expected value trade. But yeah, Bitcoin definitely does have its merits in terms of, right? Like it's just stability is an asset, right? And like it's been around the longest. So
yeah, it's kind of funny. Like I think I wasn't expecting like us to talk about Bitcoins for so long on this podcast.
No, yeah,
we're both crazy like Ethereum bulls, and here we are just talking about Bitcoin, whether people should put it in their portfolios or not. It's kind of funny. Anything else you want to talk about, or you think we should wrap it up?
Yeah, we've been on for a while.
Yeah. Well, so I think this has been great. Probably pretty rough. But
definitely a little rough, yeah. Like I'm gonna watch this and probably cringe, but hopefully we'll get better with practice.
Yeah, exactly. But I think this has been good. It's certainly been a lot of fun, just talking about crypto. And so if you guys enjoyed this, I guess just email us with your questions or feedback if you have any. It's thecryptolifepod@gmail.com. And we're gonna do this weekly. Just try for an hour. If there's anything you guys wanna ask us or talk about, definitely email us. So with that, I guess we'll see you next week.
All right. Catch you later, friends. Bye.
Later.